Hello there, this is James and you're watching Tixee Live, and a very good morning to all of you, a very happy Tuesday. In today's program, I want to discuss how a certain central bank has surprised the market today and ask the question, is this the sign of things to come? Are we going to see the change in the tide in relation to interest rates? Plus a couple of other stories, because we have a lot of risk on appetite on the market, and I want to discuss why that currently is. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So yes, good morning. Good morning to you too. I hope you're well. So yes, we had a little bit of a shocker down under today, because as I mentioned this morning during the Asian session, Reserve Bank of Australia was going to announce its interest rate decision. And the precedence or the anticipation was they were going to do another 50 basic point rate hike. However, they didn't. They did actually quite a dovish rate hike. They actually raised rates only by 25 basic points. By all means, they did mention in the press conference which follows, they will be doing more interest rate hikes. But that 25 has surprised the market in a big way, because they've RBA has raised interest rates 6 times this year, 6 times. And from March onwards, every interest rate hike they have done has been 50 basic points, which is pretty aggressive. And yes, their interest rates now stands at 2.6. And they are facing, inflation in Australia at a 20-year high. This sort of dovish mood makes me want to think that, is this the sign of things to come? Are we going to see, mainly from the Fed, this is, maybe slightly less aggressive stance as well? Are they going to start changing their mindset and being a little bit less aggressive with interest rates like the RBA? Because the RBA have been aggressive for a central bank. I mean, I'm not saying that Bank of England or the ECB needs to be less aggressive. Those two central banks, especially the BOE, need to be aggressive. But Australia maybe could be showing the signs, and maybe, just maybe, the Fed could do something similar and be less aggressive come next month. But, in my opinion, I don't think there's any way of changing the Fed's course currently. But there's something else I want to discuss about that. But anyway, let's have a quick look at the Aussie and see how the Aussie reacted to this announcement. As you can see, this is the candle of when the announcement was announced, when they announced only 25. As you can see, the Aussie dollar got weaker on the back of that. But we are facing a weaker greenback at the moment, a weaker dollar. I'll explain the reason why that is in a minute, which meant the Aussie dollar soon then bounced back up and is currently trading around 0.6552. So yeah, it did manage to recover quite convincingly after that initial shock of only a 25 basic point rate hike. I mean, it's funny me saying that. I remember the day where we had interest rate cuts continuously. So saying only a 25 basic rate hike is aggressive. Hey to you too, Cypress X. Nice to see you. I hope you're well and having a cracking day. I really do. But yeah, like I just mentioned, the Aussie dollar is benefiting from the fact we have a weaker greenback at the moment, a weaker US dollar. And the reason why that is because we have risk on mood in the market at the moment. And this was due to the US manufacturing PMI. Remember, I mentioned this briefly in yesterday's afternoon's broadcast, because the ISA manufacturing actually came in, or actually was announced at 50.9 versus 52.2 expected. Now, don't forget, anything above 50 is still considered neutral, pretty good. But anything below 50 is considered very negative. So it's still above 50. However, the reason why this has generated risk appetite on the market and a slightly weaker greenback is that because this is actually the lowest reading in 2 years. Lowest reading in 2 years. In fact, this year, if we look at it steadily, January 57, Feb 58, March 57, April 55, May 56, June 53, July 52.8, August 52.8, and the latest 50.9. So this is why the market has got a risk on appetite. And I'll tell you the reason why, because of this negative data, because it does indicate there is a slowdown in the manufacturing sector, which means the market is thinking, you've guessed it, the Fed's going to be gentle in interest rates. So you combine that and combine the Fed surprise announcement by the RBA, the market's thinking if the RBA could be less aggressive and there's a slowdown in manufacturing, maybe the Fed will be lighter on their interest rate decisions. I think that's a mistake, to be honest. I don't think there's any going back from what they want to do. I think they've already said time and time again, they are committed to bringing down inflation to their target no matter what. So I think the market's kidding itself at the moment. The only real change, and I think this is what's going to be really big at the end of the week, is the job market. That could be the one thing which maybe make them hesitate a little bit is the job market. But then again, they've also said they're prepared to make the job market softer. So again, that's not really bothering them either. But anyway, but it's not, like I say, it's not just the weaker greenback, and we'll look at the currency pairs in a minute, and the precious metals are benefiting as well. But the stock market in general is in a positive mood, which is not surprising because let's face it, as I mentioned yesterday and the day before, September has been absolutely brutal for the market, brutal. And anyway, the S&P deserves a little bit of recovery time, I guess. So the S&P is actually closed yesterday higher at 2.6% higher, and NASDAQ closed 2.3% higher during the US session. And currently, as they stand, the S&P is currently trading in the green, 1.43%. NASDAQ currently in the green as well, 1.71%. And the Dow 30 currently trading in the green at 1.20%. So yeah, risk on appetite at the moment. How long will this last? And we'll talk a bit more about that in a minute. But like I say, in general, at the moment, we have got a very weak dollar in general. This is why, it's generating this risk on appetite. So let's have a quick look at a couple of pairs. In particular, let's have a look at a pair we've been talking about a lot over the last couple of trading sessions. Certainly last week, it was all in the headlines. Let's start off with the cable, the British pound, US dollar. As you can see, it's currently trading higher, and it has actually had good six sessions now of gains. Currently trading at 113.607. 113.607. Now, practically, if you look at this on a daily, we're practically at the levels it was trading at before the UK government announced its mini budget. Obviously, yesterday the UK government did a very embarrassing U-turn, and they removed any chances of taking away the higher rate of income tax, which the market did not like one bit. However, like I say, though we're trading higher on the back of that, and it's interesting, we're touching that trend line. Remember that trend line we put in some time ago when we did the hashtag Ask James episode and we discussed trend lines? It's still hovering around there. So I think at the moment, the key area for me would be area of interest will be 114.642. That's the area I'll be keeping a very, very close eye on. But at the moment, it's still under that trend line, and it's still only trading at 1.13574. Now, this is interesting. I want to talk a little bit about this as well, because obviously, as you can see, we've had several gains after falling to an all-time low. However, though it's got a little bit of a boost, because the UK GDP last week came in better than anticipated, and the turnaround by the UK government. However, the fundamentals for the UK is still very much negative. And I think though we've got some momentum for it at the moment, I think it's only a matter of time before we see the cable or the sterling come under pressure again. So, like I say, for now, let it enjoy its bull run. But like I say, it's not just me. ING, for example, they reckon any momentum above 110 is going to get exhausted. And some banks, like I say, are even saying parity and even below parity by the end of the year for the great British pound. So like I say, for now, okay, there's a bit of bullish momentum. Medium to long term, though, I would be in agreement. I do see this pair coming under pressure. What will it take? Good, very good question. What will it take for the GBP to gain back some power? Look, to keep this bullish momentum going, in my personal opinion, I think eventually it will start to run out of steam because, like I say, the fundamentals are still very much there. However, what I think will really boost the pound will be more aggressive action by the Bank of England. Definitely will come with interest rates in November. And don't forget, it'd be interesting to see what happens on the 14th of October to the market and particularly to the bond market, because that's apparently when the Bank of England is going to stop its bond purchases. Don't forget they did that as an emergency action last week to protect the bond market because that was collapsing on the back of obviously all the pressure on the UK financial system. So it'd be interesting. Now, Bank of England being a bit more aggressive, and I'll tell you what else can help the sterling if we can maintain this weak dollar. Because that's the real thing as well. Dollar weakness is going to be the real driving factor. Can we maintain dollar weakness? And like I said, I think not for the long term. But great question, by the way. Thank you. Really good question. Let's look at something else now. Let's look at the euro, because the euro as well, it's having a slightly better day as well. It is on the way up, moving up higher as well. Currently testing this key area of interest for me of 0.9870. After that, it's really need to be looking at the 199.50 level for me to see it get any more momentum. Again, like I say, its main benefit for the euro at the moment, obviously, there's a little bit of chat about this German, what is it, 200 billion gas energy shield they're trying to put into place, which is giving a bit of a boost. But again, they're really benefiting from benefiting from the weaker dollar at the moment. But there is a couple of speeches later today, which I'll talk about in a bit, which could also change that. The precious metals, they're really benefiting from the weaker dollar. As you can see, my beloved yellow metal is currently trading just above that key level of $1,694.30, a level I've been watching for quite a while. Really, the next key area for me on the gold is $1,726.48. Like I say, the yellow metal at the moment, like everything else, benefiting from weaker dollar and lower bond yields as well in the US. Silver, I don't often talk about silver so much. The little brother of gold, that's on the move as well. That's benefiting greatly from obviously this current risk on appetite. Currently trading at $20.87. My real key area for me right at the moment, if we can maintain where we are now, that is, if we can maintain where we are now, will be $21.94. Bitcoin, let's go for some more risk on appetites. Again, yes, it's also benefiting, but it's still hovering. It still can't break that key area we've been looking at of $20,355 for now. So it's still very much range bound between $20,355 and a key support area of $18,438. What else is happening today? Okay, obviously we've got risk on appetite, but really, realistically, all this could potentially change. I don't think it will, and I'll tell you why. We've got quite a few speeches happening today. First of all, we have Fed Williams speaking at 1 p.m. UTC, and at 1:15 p.m. UTC, we also had Fed's Mr. Speaking as well. Now, Williams can be slightly more hawkish. Mr. is always come across a little bit more dovish than hawkish. So I'm not quite sure if their speeches would really change the mind of the market at the moment. But they're also in Cyprus today, where I am. We have ECB's Lagarde speaking in Cyprus. She's actually over here for a couple of days with the Cyprus Central Bank. I was invited, of course, but unfortunately I couldn't make it. No, I'm joking, obviously. But anyway, now she's speaking today at 3 p.m. UTC. Interesting what she says. She has surprised me a lot over the last couple of press conferences she's done and come across fairly hawkish, actually. She was a real dove. But like I say, we all know, she keeps saying about raising interest rates, the ECB has to. So yeah, next one, which will be 75. So we're all expecting that happens in a couple of weeks' time, obviously. So it'll be interesting what she says. Other news happening. Obviously, we've got US ADP employment change tomorrow, US ISM services PMI, EU retail sales, German retail sales, US unemployment rate, and US NFP. That's the barn burner. That for me is the barmer burner, and that's why I will be doing a watch along to US NFP, because if we start to see slight cracks in the labor market, then maybe the market definitely will gain hope that the Fed may start to back down a little bit. So I think that's going to be the cruncher. European equities, as they currently trade, all in the green. Happy days. Everybody's in a good mood. FTSE currently in the green, 155%. DAX currently trading higher, 2.38%. Eurostoxx 50 currently in the green, up by 2.64%. How long will this happy feeling last? I'm not sure. We'll have to see. But like I say, I think we've been here before. We've had a bullish momentum in the market before. We've had a little bit of negative US data. We've seen a surprise by a central bank. And then the market clings to that hope that the Fed will not be aggressive, only have that hope dashed. So we'll have to see how long that hope can maintain and see how long the dollar can remain weak, because that is really the key for the currencies at the moment. How long can that dollar or greenback stay weak as it is at the moment? Don't forget, you can ask me questions anytime you wish, or share with me your opinion. Talk to me about an asset, or simply say hi if you like. You know, it's entirely up to you. Entirely up to you. Let me know what you think. But he makes a nice change today, talking a little bit more about risk appetite than risk off appetite, which we've been talking about for several videos. And I have come across as a bear because I am quite bearish on a number of things. So it's a nice change to talk a little bit about risk on appetite today. So that makes a nice refreshing change. That's what I wanted to look at as well, actually. Dollar yen is interesting as well. Let's just pull that up as we'll see if anybody wants to speak to us. Currently trading at 144.72. So still, that's the one pair, that's the one thing. It's still maintaining a little bit of bullish activity too. This is an interesting statement. This is a good point. Let me take this off and have a talk to this. Yes, I know. I've read that. Because again, this is the anticipation that the Fed's going to do a pivot, though, in January 2023. Because look, here's the thing. The market is hoping for this. The market's hoping that eventually the Fed will start to slow down with its interest rates, and then we'll do a pivot and stop. And then even consider lowering it. They have said this time and time again. Especially Powell, he loves talking about history when he discusses interest rates. He said, and he keeps talking this like the 70s, it is a mistake to lower interest rates too soon. And it's the mistake which was made in the 70s. I again think the market is kidding ourselves that they're going to do a pivot in January. They've already said they're committed. And they're happy. Again, it really depends. It really depends on how quickly the labor market really starts to decline. But at the moment, the US labor market has really been really strong. And again, it also depends on the earnings season coming up. How many companies are going to start disappointing this season with the earnings? But again, I can't see it personally in 2023. In January, too soon. Mid-January, possibly. But brilliant point. Very good point. I mean, there's another analyst which I follow a lot, Michael Wilson, who is the chief analyst for JP Morgan. He again, he keeps saying from the rafters, the Fed are not going to stop slowing down. You know, they'd be greatly surprised if they start to slow down, because they don't like the markets reacting in hope. And they keep saying when they come out for speeches and talk about it, they keep saying, we're surprised you're thinking like this. Aren't you listening to us? You know, haven't we said this time and time again? We are not backing down from our plan. But that's a good point. I can't see January, but maybe in the middle of the year. We'll see how the labor market is. But that's my opinion. I don't think they will. I don't think they will pivot back then. But it's a brilliant point. That's a great question. It really is. Thank you very much for that. Thank you. Any other questions at all? Anything else like to ask me anything? Or raise any other points? Not a problem. Not a problem. Don't forget, if you think of a question later, you can put it in the comments section, either on YouTube and Facebook. I will see them and I will reply to it next time I go live on air, which of course would be today at 2 p.m. 2 p.m. UTC to cover the US session and any latest developments happening in the EU session. So please come and join me for that. If there is no further questions, not a problem. Big shout out to SMF 790 for watching and saying good morning. A special shout out to Cyprus X, for great questions and great interaction. I really appreciate that. And thank you for your time for doing that. I really do. And same with all of you. I really appreciate you guys taking your time out to come and watch me on my little show. Anyway, till next time, like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video and you found it useful, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video and you've put up with me, my over-the-top enthusiasm for the markets, I cannot help. Cool, fun show. Thank you, buddy. I really appreciate that. Thank you. I really do. But yeah, because if you put up with me, you enjoyed this little video, by all means, give us one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. So I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.